What up, HyperChange? Welcome to another Tesla episode. The stock is down 61% year to date. People are concerned about Elon's actions buying Twitter, whether that's affecting the company. There's just been a lot of swirling drama, and I want to say the Tesla community is more divided than ever right now. So I wanted to give y'all my thoughts. I hear you loud and clear. At a high level, I'm holding all of my Tesla stock. It's my biggest investment. I think the company is on an incredible path to execute. And I think this is a lot of short-term headwinds that we're going to get through, and it's going to be awesome. And if anything, this is a normal, rational, sort of healthy correction in financial markets. But I want to walk through all that and explain my thinking, and also give y'all a little update because I removed all the videos on my channel, wanted to start fresh, put out 2 Tesla videos, and now it's just and then I put out my pepper review videos, which have left a lot of y'all confused. So if you're following me, the pepper videos, I love farming. I'm a totally DIY pepper farming nerd. I have all these crazy exotic pepper seeds from all over the world. I planted them in my apartment, grew them, and I wanted to document my harvest because it's so cute and special, and I worked so hard for it. And then I was like, wow, this is a really fun video. I'll put it on YouTube. Why not? And so you can expect me to have a lot more weird videos on my channel, and I'll probably re-release all my old Tesla videos, and I will still make Tesla and economic videos. But the truth is just I have more to do in my life than talk about Tesla all the time. I used to cover Tesla every day on this channel and, on Twitter, and think about it and research the company. And that was my job for 2 or 3 years. But now I'm kind of over it. I kind of made it, for lack of, I don't know. Tesla stock has gone up a huge amount. My financial situation's changed. I started my own investing firm. We're investing tens of millions of dollars in startups. I'm talking to founders every day, doing really cool shit there. I'm bootstrapping another few of my own companies that are in secret development that I can't wait, that I'm working on. So I'm personally doing a bunch of other stuff. But investing wise, I haven't strayed from holding all of my Tesla stock, believing in Elon. And I feel like now is the time for me to step up. I mean, yeah, the stock is down 61% this year, but the stock market's down 20%. A lot of high flying stocks are correcting. And if you look at Tesla's chart, it's so simple. It's we went up like this and the euphoria happened. People were buying JPEGs of monkeys for millions of dollars, and it goes like this. The euphoria, the sentiment goes crazy. And the valuations of everything get out of control, of every good stock have come down significantly. It's the more out of control you got, the more you got to rationalize. And if you look at the 5-year chart, this is what I think is so interesting, is Tesla stock's still up almost 600% in 5 years. This is including all this pullback that's happened. The S&P is only up 50% in that period. Apple's only up 230%. That's one of the best performing stocks in that period, too, of large caps. Amazon's only at 55%. Starbucks is only up 75%. If you actually zoom out, Elon Musk and Tesla have created more value for shareholders than almost any public company, and faster than almost any public company in the history of ever. And it was mostly by retail investors, not institutional investors. And so most people are way up on their Tesla stock. But the problem is there's a lot of shareholders who came in on that peak euphoria run, who were following all these people saying 100 trillion bull case, Tesla's going to be, Tesla's still one of the biggest companies in the world. It was valued at $1.2 trillion. That's one of the biggest companies in the world. And people think it's immediately going to 10x from there. That just wasn't rational. So now you have a loud minority of people on Twitter saying oh my God, Tesla needs to buy back shares. This is ridiculous. Elon's not acting like a CEO just because the stock's down this year. But if you just zoom out a little bit and you actually look at the real scoreboard over time, there is such a clear and obvious Elon Musk has created more value than any other CEO for any public company shareholders, that it's what are you talking about? Get in line. Just, you kind of got to check yourself. First of all, Elon and Tesla have built the world's biggest auto brand. They're growing incredible amounts. All of their financials are the company is doing so well, coming through on all these initiatives. Cybertruck's about to come out. Semi's about to come out. They're installing this huge mega pack in Belgium. FSD is rolling out. The company itself, who gives a shit what Elon's tweeting? The stuff that Tesla's actually doing as a company is incredible right now. That's why I'm so happy. And on the flip side, I think a lot of people on Twitter make fun of me, Gali, you turned into a bear. You're saying Tesla shouldn't buy back stock until $100. Gali's got a $100 price target. It's my price target, I think this, you're kidding yourself if you know what the stock's going to do tomorrow, in a month, or in 2 months, or how the economy is going to do. Nobody can guess that. I just think now the stock's fairly valued, and I can see a situation where the stock market goes down a lot more, and Tesla stock does hit 100, not because something's wrong with Tesla or I think it's, overvalued now. I just see a scenario in which that could happen, and that's when they should do a buyback. Doing a $5 to $10 billion buyback when you're worth $500 billion is 1% to 2% of your company. It's not going to move the needle. It's not going to save the company. And the people that are cheering for this the loudest all bought in at the top I hate to say names, but it's like Gary Black. Like, he started an ETF right at the top of the market, and he's super loud on Twitter, and his ETF is crumbling, and so Tesla's his biggest position, so he needs to like he needs Tesla to turn around like now, or he's screwed. And so he's the one tweeting the loudest, and people think that he's got this good analysis, so they latch onto it, and that's how this movement of short-term thinking, kick out Elon, the company's getting ruined, takes over, when really it's just a couple whiny shareholders who bought at the top and aren't thinking about, they say they're thinking about what's best for Tesla long term when they're not at all. So that's what's kind of been really frustrating about me, is I've seen, it's so fascinating when Tesla stock is down in 2018. Nobody, like, we were such a kind of like band of homies who believed in the company for the right reason, and who were so used to everyone saying the company sucked, Elon was wrong, the stock going down every day. Like, we lived through that for years, and then it went way up. And I think all these people just kind of latched onto the train and got used to the stock soaring without putting in all that hard work and appreciating the company that was built. And then, because of their own lack of research on the valuation and going all in at a peak market cycle and not understanding that, now they're whining on the way down. So, and I don't want to like, dive too much into that, but that is what the crux of the sentiment right now is, that there's a loud, tiny amount of shareholders who are frustrated because the stock's down. That's going to happen. But if you zoom out, Tesla stock has absolutely crushed it. And I think a lot of this stems from, like, one of my big rules in investing is never take on debt, leverage. A lot of people took on leverage, so they bought more, they spent $2 million buying Tesla stock when only had $1 million in the bank because their brokerage loans them money. They'll do this in bull times, but then when the stock goes down, you have to sell it all and put up collateral and margin, and that can screw you. So I would say my biggest advice that I've learned in, I'm 29, so I'm young, but I also started investing when I was 14 with my life savings. So I've been in the market for 15 years. I went through 08 and got screwed in 08. And, I'm in this market cycle, and I learned to invest in way more solid companies. So, like, you think, and the funny thing is, like, I'm holding Tesla stock. Like, I'm down 61%. I'm down over $500,000 on Tesla stock this year personally. Like, I haven't sold any, but on paper from where it was, but that doesn't trip me out at all, because I'm still up huge from where I was, and I just have to put things in perspective. And yes, I feel bad for people who, but Gali, I bought at the top. And also this show's never financial advice. Like, I just do this to tell y'all what I'm thinking. Do not follow me for financial advice. You know what I mean? But Gali, easy for you to say, you've been in Tesla for 5 years. Like, of course, you're up huge still. Like, I bought in at 400. That's why I'm like, crying and freaking out, and I'm losing all my money. And it's like, okay, I hear you, but you bought into Tesla stock when the profits were huge, when everybody got the story, when it was super obvious, all the investors who bought in when nobody believed in it, when the financial story wasn't there, when Wall Street was saying it was going to go bankrupt, you get rewarded for being early. High risk, high reward. You went in when Tesla was super profitable. Everybody believed in the company. The valuation was 1.2 trillion despite 10 billion in earnings. 100 PE ratio for a company of that size is unheard of. But I don't know how many people actually thought that through when they bought. And so I still think, in the long run, $1 trillion valuation in 2021, you'll still we went to the peak and now we're going to trough, but we're going to peak again. We're going to get back past that. It's just patience. And you got to realize Tesla's stock market's like this. It's going to wobble like this. The intrinsic value of Tesla as a company, its ability, what I boil down to, its intrinsic ability to produce cash flow goes like this. It was losing a bunch of money, then it was like 5 billion, 10 billion. Now we're about 15 billion in annualized cash flow. So if we're at 156 a share, that's what we closed today. 3.6 billion shares, that's fully diluted, assumes a little dilution. I like to have a little safety net there. Then we're at a $561 billion market cap. 561 billion divided by 3.7 billion, our Q3 earnings, annualized 14.8 billion, about 15 billion. We're looking at a PE ratio of 37. Just a little over 37 PE ratio right now based on Q3. So that's not super cheap. The S&P of the PE ratio of the S&P 500 is about 20 right now, and that's already historically high. And one thing that's super important to remember here, and why I think this pullback is actually somewhat very rational, because you have competition for your capital, the cost of capital. So debt was yielding 1% or 0%, right? Because we're in this zero rate environment. So you got to inverse that to get the standard, counter like opportunity cost for your equity capital. So it's like, okay, I want to invest in Tesla. They're making a P ratio of 100 is 1% earnings yield on my dollars invested on the market cap, right? So stick with me here. But, and the 10 years yielding 1%. So it's like, okay, I'm at Tesla yielding 1%, growing fast, or the 10-year growing only 1%. So like, you don't have much of a competition. Now, if the 10-year starts to go up 2, 3%, bam, all of a sudden that fair value, Tesla's earnings yield needs to go up from 1% to 3%. The earnings need to triple to match that that, so there's an entire pendulum situation on a macro level where when interest rates go up, PE ratios across the board compress. So you need that fundamental market law is going down for every company right now, and Tesla's there. Then you're like, okay, Gali, Tesla's growing super, super fast. Like next year, or next quarter, this quarter we're currently in, they're gonna do 4.5 billion in profits. Let's annualize that. That's 18 billion. Let's crunch the new numbers. 3.2% yield or 32 PE ratio. So this is the phenomena that you have with Tesla. We have the PE ratio compressing rapidly, normalizing. This is a beautiful thing. I would say 30s PE ratio, the PEG ratio. If you're growing 30%, then you should be valued at about a 30 PE ratio. Tesla could grow their earnings 30 to 40 to 50 to 60% for the next 5 years. You could argue a 32 PE ratio is starting to look pretty cheap. But it's all about how much growth you're pricing in, is I guess where I'm coming at this with. So if you're at 1.2 trillion, a year ago, and we're still at 10 billion, you're pricing in like 5 years of growth to get to 100 billion in earnings to do like a, sort of fair value maturity PE on that. So right now, it's all about how much growth are we going to pull into this valuation. So right now, I think you should do a share buyback when you're growing, but there's no growth priced in. But we're growing, but there's growth priced in. So I think there's another, Tesla's going to get to 30 billion in earnings. That'll put us at about 15 to 18 P ratio, right in line with the market. Tesla gets to about a 30 billion in profit run rate in about a year. So the market is saying we're pricing in a year of Tesla's growth already, but we're not comfortable pricing in more than that. And I think for many of us Tesla bulls, that might seem ridiculous. We know the Cybertruck, we know the Semi, we know energy's just getting started, we know robotaxi is a game changer. So if you think that is, that year of growth to 30 billion in earnings in the bag, we're about to get to 60 billion super quickly, then this is a steal. And so that's, to me, another interesting part about this is if you're really a long-term investor like me, I haven't bought Tesla stock in years. The stock has been way overvalued since 2020 and this massive run. I was buying it at 30 billion and the company shoots to 600 billion overnight with very little change in the financials. They've had to backfill into that valuation. I think real bulls on the sideline have been waiting. I've been patiently waiting for years for Tesla's valuation to rationalize. And now I'm thinking about swinging the bat again, saying now's a really good time. Everyone hates Elon. The sentiment is horrible. The company's producing more cash than ever. The valuation multiples have finally gotten close to rationalizing, or if I would say have almost perfectly rationalized. That's why I say we're almost perfectly fair valued right now, because I think you got to say, okay, it's not that much growth priced in, but there's so much macro turbulence that's just the world we're in right now. So, but I think 3.2% yield, 32 PE ratio, if it gets under a 30 PE ratio, if we hit 20, 22, 24 billion in earnings, I think I'm going to start buying Tesla heavily at these prices. So that shows you in my mind, and I feel like I'm so disciplined. Like, yeah, I still think it's a great buy now for a long-term hold. I still thought it was a great buy at $1 trillion if you're a long-term hold. I'm holding all my stock, but where do I feel like I want to aggressively add to my position personally? It's when either the valuation's flat. It's basically when we compress to about a 15 to 18 to 20 price EBIT ratio, whether that's because earnings skyrocket or the stock falls to 100. We'll see what happens first. But, and this is why it's a beautiful spot to be as a shareholder, because you're like, damn, like we're worth 550 billion today. Tomorrow worth 550.1 billion. The next day, 550.2 billion. Like that intrinsic value of Tesla just keeps chugging up. So if you really love this and you really want to own Tesla for the long term, you see the Tesla bot, you see FSD, you are not whining about Elon about the buyback. You're like, shit, Elon, we hope the stock goes to $90 and then we'll buy it back then, and we'll buy back twice as many shares as we would have, and that's going to be a way better deal. So like, let's leave that on the table. And also, in the meantime, I'm about to increase my personal ownership of Tesla, because this is an opportunity. If I really am like, you're like, oh, Tesla, why don't you buy back stock? It's like, why don't you buy stock? Like, Tesla's such a good deal. It's so obvious. Like instead of whining about Elon and the board of directors not buying back stock, why don't you buy back stock if it's such a good deal? Like, you should be buying stock hand over fist, not tweeting. You know what I mean? Like, that's what people, like, that's what I'm scheming on, is like, damn, like, yeah, like this is going to be an amazing time to invest in Tesla, because if you're patient enough and see it like that. And so anyway, that's it. This is kind of my message to Tesla investors. I would say what I'm personally like looking forward to on the horizon, like what I've personally been paying attention to, is I think the Cybertruck is actually going to launch in the next 12 months. And I think they're actually making the CapEx investments now to scale that. And I think that's going to be big. That's a game changer. We've been waiting on that. The semi truck, That is such a different market than we're in right now that has so much potential, that could be a $500 million company on its own. I mean, trucking is hundreds of billions directly in terms of revenue, trillions if you think about like the amount of dollars moved on trucks and like that entire industry. If you want to look at the size of the actual heavy truck sales in the US, it's 40,000 heavy truck sales a month, about 500,000 a year. If Tesla captures 10% of 500,000 a year, sells 50,000 trucks, 10% of the US market, 180,000 a truck, we're looking at $9 billion in revenue. So that just is another thing to like run through. Like $9 billion in revenue isn't going to move the needle for Tesla. That's not going to change the valuation. So you think about this, how big of a valuation we got. It's pricing in a $50 billion truck business. It's pricing in a $50 billion, you know? And so, I mean, I don't know. There's a big question in terms of if Tesla can maintain their profitability per vehicle that they have now, and it actually goes up with FSD, they're going to be insane. Like this talk is going to look dirt cheap if they execute. But that's where, and this is my wisdom. Like, I think you may be like, Gali, like you're being a little bearish, blah, blah, blah. Like the reason why I am so confident in investing and I feel like I sleep so well at night is because I am ruthless when it comes to analysis. And I feel like you got to be. And I tweeted this a while ago and I was like, what if Elon Musk buying Twitter, creating a Vine competitor, pisses off TikTok, China's beefing with Elon, something happens, all earnings immediately implode from Tesla China. We spent all our money on a buyback. Now we're screwed. That is the worst. Okay, FSD hurts somebody and a media campaign goes out of control and the FUD goes crazy and they stop FSD and Tesla's a horrible name brand forever. These are like the two, like, and you're like, yeah, those are so dark and weird. And like, or Elon, something happens to Elon, you know? But those are the only things that I think can stop Tesla. So if I'm actually a rational investor, like I have a doom and gloom, like, how can, in the possible scenarios of the universe, can my investment fuck up? In every single scenario of the universe. And so, I don't know what to say, but you know, Tesla, even in all three of those situations, Tesla no longer relies on perceived solvency, which I think is the biggest win and why I personally have stopped covering Tesla so, you know, dramatically and like have been so passionate about, I'm no longer as passionate about telling the story because Tesla's successful. You know, now our biggest argument on Tesla Twitter is like, oh my God, like, what should we do with all the excess guap we got? We got like 10 billion we don't know what to do with. Like, should we buy solar panels or buy back our own stock or like buy the Boring Company? Like, I think we should buy the Boring Company. Elon, do that. But you know what I mean? Like, oh my God, like Tesla's biggest problem used to be the company might go out of business tomorrow. Everybody thinks it's bankrupt. Everyone thinks Elon's a fraud. Like, I'm like, shit, I better make YouTube videos to like tell the truth and like get the word out and save Tesla. But like, that doesn't matter now because Tesla's making so much money. The biggest problem with Tesla isn't where they're going to survive tomorrow, is how much money they burn next quarter, is if we're barely hanging on by a thread. It's if we can get this car launched, if we can scale. No, it's what we're going to do with the excess $10 billion on the balance sheet. That's what people are whining about. Like, so we've come a long way. That's a great problem to have. But you know, I really think the day-to-day movements of Tesla stock, you know, that's my advice to a lot of people is, man, like there's so many better things to do in life than look at the stock market every day. And, you know, if you really did your homework and invested for the right reasons and believe in the company, all you need to do is follow the quarterly earnings of the company. You don't need to be on Twitter. You don't need to follow the chirps. Like, you know, I think the car business is $1 trillion. I think the energy business is $1 trillion. I think robots are several trillions. I think $1 trillion looks cheap if they do semi and robo-taxis autonomously. Like, nothing has changed, you know? And as long as we're tracking to bring battery production in-house, to solve self-driving and scaling production, then nothing else matters. So those are the only things I care about. And for what it's worth, the calls to remove Elon as CEO, I think, are insane. Like, Elon has single-handedly created more value than any entrepreneur alive in terms of market capitalization. So just from like numbers and scoreboard, like, this guy is the best CEO on the planet. He is an unbelievable technologist. Tesla looks like a big, massive, one of the biggest companies in the world. It's actually just, you know, that's a mirage. It's really just like a collection of all these incredible startups, like people say, that are still in their infancy. And that's why, as much as I'm saying like Tesla's fairly priced, don't price in too much growth, that's the rational, prudent investor in me. The bullish investor in me says Elon Musk is still in his prime. Tesla is just at the cusp of monetizing the battery and self-driving technologies they developed. 80 billion in revenue, 15 billion in profits is just a tiny sliver of the potentials of the technologies that they're developing. And I think earnings are going to go from a $15 billion run rate to a $150 billion run rate in the next 5 to 7 years, and Tesla will become a multi-trillion-dollar company. That's deep down what I believe. But is swinging my bat at 1.2 trillion for a $4 trillion company in 5 to 7 years not as good of a return? Swinging that bat at $420 billion market cap, if we fall down a little more to get to 4 trillion, now we're talking fun returns. Now we're talking deploy aggressively into that. I kind of try and stay humbled as well. Like, I think it's kind of a beautiful thing that we get to, like, I'm an investor, and I think Tesla, like, I go to the factories, like, the privilege of investing in Tesla and having the opportunity to like buy stock in this company, like anybody can buy stock in Tesla. It's a public company. Like the technology that they're developing, like Elon Musk is such a genius with such an army of the world's best engineers behind him developing clean energy technologies. And like I got to invest alongside that, be a part of that movement, be a part owner of that company, like go to these events. Like every time I look at see a Tesla on the street, I smile because I knew I invested in the company when the Model 3 was Gen 3 Project Blue Star, when Model Y was a fraud to save the company. And now I see Model Y everywhere. Like, I don't know. I just feel like Tesla is so much bigger than this like stock price decline, and being part of the movement is what got me into Tesla, and that's what keeps me with Tesla. And seeing how early we are in the movement gives me confidence that in the long run, the company will continue to grow. And that's why I'm not bothered by this short-term noise. And I think it's just the hard pill to swallow that stock prices get overheated, corrections have to happen, and that's a normal part of the markets. And those who have experience, act in a contradicting way than the market sentiment, and I think that's where the alpha lies. And so, Gali out, HyperChange out. This is fun. I love talking Tesla. Y'all, I read every single comment. Hit me with the comments in the YouTube. Like, this is a discussion. These are just my schemes, just what I'm doing. And I want to know what you're doing too. And I hope you'll have an amazing day. And yeah, peace out. Also, the pepper videos. The reason why I'm doing the peppers video on my channel is I'm doing an experiment to see YouTube videos versus Twitter videos, because Twitter is going to launch video, and that's why I kind of want to experiment. So anyway, that's a fun fact. Peace. As I'm editing my video, news comes out yesterday. Elon Musk sold about 22 million shares of Tesla stock. So one of the reasons the stock has been going down is Elon Musk has been selling. Now he owns, according to my research, about 424 million shares, depending on how you calculate how many shares there are. That's 12 to 15% of Tesla. And Elon sold a significant amount of his Tesla stock, mostly to purchase Twitter. I think this is a very important thing to understand. He's not selling Tesla stock because he wants to, and he's like cashing out of the company. He's just taking it and hoarding this money. Elon Musk has a very sort of interesting, I would say slightly precarious financial arrangement with his banks, where he essentially puts up Tesla stock as margin, and then they give him cash to do other stuff. So he's on margin on debt. Remember what I said earlier in this video, like margin and debt are horrible. And even Elon says that. But that being said, he's kind of on, I would say, a lot more complex personal financials than most people. And so he has hundreds of billions in Tesla, or had like, a huge amount, 100 billion in Tesla stock, wants cash, but doesn't want to sell the Tesla stock. So Morgan Stanley or his bank will give him a loan against that Tesla stock. But if Tesla stock goes down, then he has to sell Tesla stock because the margin is too much of a percentage of, he doesn't have enough collateral. So what happened with Twitter is Elon Musk needed cash to fund Twitter. There was a bunch of debt taken on to fund the Twitter acquisition. Twitter advertisers drop immediately. So you had this like crazy moment where essentially Twitter, the company, needs a huge amount of cash. There's a huge amount of interest payments on the debt that Elon used to buy the company. So Elon needs to de-lever essentially his own financial portfolio. And that's why he's selling Tesla stock right now. And that's why he's not tweeting about it, because he doesn't want to cause I don't know, there's no reason to draw attention to it. But I think he'll talk about it when he's done selling. So I don't know if he's done selling or not, but I think it's important to note that Elon Musk's ownership of Tesla is dropping. You just got to think incentive-wise. He's got a lot of stock in Twitter, a lot of stock in SpaceX. His exposure to Tesla relatively is dropping, but I will say I still think he's hugely, he still has a 50 billion position, 60 $60-70 billion position in Tesla. If he 10x's it, then he's going to make 500 to 600 billion to fund Mars. So I still think that's the plan, but there's been a clear change here. Elon Musk is selling his Tesla stock to essentially be able to buy Twitter, is what's happening here. And he needs to reduce leverage in his portfolio. And I think there is a nightmare blow up scenario that every Tesla shareholder should be aware of, where Elon is on loans. If the banks get mad enough, if Tesla stock falls fast enough, if Twitter can't be saved and Elon Musk needs billions and he's forced to sell and he keeps pushing, like, it's just not a good situation. So that's why I think if you really think about it, Elon Musk getting ahead of the curve to reduce his debt position now so he doesn't have a horrible margin call is a very prudent, smart move. So that's basically what a long way of saying that's what we have happen here is Elon manages his personal finances with debt, and he wanted to reduce his leverage or just maintain his overall leverage but acquire Twitter, and that meant selling some of his Tesla stock. So not ideal, but that is what happened. That doesn't change anything else I said earlier in the video, but yeah, I want to add that update. All right, peace.